Yes, let's take the discussion forward. We do have our guest today, and let's try and find out which sectors are looking attractive at this point in time. And Varun, if you can help us with your take on the paint companies as well. Yes, we do understand that there have been a lot of concern with respect to the new competition coming in from Birla Opus. But other than that, given the kind of fall that we have seen in stocks like Asian Paints as well as even Berger Paints for a matter, 20 to 30% these companies have corrected in the past 1 year. Do you find the valuations attractive? And given the demand prospects, how do you see these stocks as a good investment bet?
So, these are great companies with no doubt, great franchises which have been built and they have the distribution reach, all that is there in place. But one has to keep in mind that there is some serious competition in the form of Birla Office which has come in. They also have a significant reach across the country, and that is what is denting their business for now. I don't see this pain to go off in a hurry, so I don't see any reason why one should look at buying Asian Paints or Berger currently. The point here is that till the time we don't have visibility on growth and growth being very strong, these are best avoided for now. I don't see a reason why, even after this 20% correction at say around 45, 50 times earnings, still these stocks make sense. Till the time we don't have visibility on earnings starting to pick up or beating estimates. So they would be best avoided in my view.
Okay, best avoid paints for now. But Naresh, what's your reading on the charts? Does it seem specifically, at least for Asian paints, that the worst could be behind, considering it's one of the worst performers of 2024?
So tough to call if the worst is behind, but it's just that it's fallen so much, there could be a bounce back. That's the case. Any bounce back could take it towards 2450 to 2500 mark. And that could be the zone where one could actually look at selling the stock or reducing allocations. The trend has been broken. So if you go back all the last 1 year, there were multiple times it stopped around the 2600, 2650 mark. In this move, it broke below those levels, the gap. So I would expect it to keep finding selling pressure at higher levels. So an avoidable stock, but yes, there could be some bounce back given oversold nature.
Could be in for a technical bounce back when it comes to the paint counters. But Varun, just a day away from the IT earnings kick starting, and bellwether TCS will be reporting its numbers. But this time, what we are given to understand that a couple of these large cap names from the likes of, say, HCL Tech and Infosys, they're expected to narrow down their guidance. And even when we look at the lower end of the guidance, that is expected to be a little more comforting in a sense. So any stock that you wish to highlight where you have your eyes on, or your brokerage firm has your eyes on, and the expectations are on the positive side?
See, IT sector has been in complete for the last 4 months. But there's been a sharp rally we have witnessed across these, especially the mid caps
Uh,
have done extremely well.
Right. Varun, we've got you on a bit of a patchy line. We'll just reconnect with you. In the meantime, let me just walk you through what are the movers as we speak right now. The markets, by the way, have perked up back into the green. Let's see whether this looks like sustainable or not, and can it last for more than half an hour up until close. It's definitely oil and gas all the way, led by ONGC and Reliance. You've got an Oil India as well, which is looking strong. It's holding up a good 4% as we speak. We were just flagging off Asian Paints. That's definitely perked up quite nicely. And TCS is adding on more weight, about 1.5% higher as we speak right now. This ahead of its earnings come tomorrow post-market hours. Naresh, what's your reading on the charts of Nifty IT? Because they've also had quite a volatile ride off late. And now tomorrow, of course, they're going to all start to react to the numbers when TCS delivers the same.
So the longer term charts are interesting for the Nifty IT as well as a lot of IT stocks. In the short term, given that it's been one of the best performers from the June election lows, the IT index is up 20-25%. And a lot of stocks have done really well. The mid cap side looks a little risky. There could be sharp corrections if there's a disappointment in numbers. The large cap side, TCS, Infosys still look very interesting on any sharp knockoff on the numbers. Infosys would be the top bet. That looks like a 3-year breakout in the making. So that would be a buy on dips to 1850 or a breakout about 2000. TCS closer to 3850, 3900 is a good buying zone.
TCS may enter in a good buy zone, but if you can help with your take, Naresh, on stocks like Shoppers Stop as well as Phoenix Mills, these stocks are doing pretty well today, and after a while, actually, I'm seeing a gain of almost 5 to 7%. Anything different that you're spotting when it comes to the technical parameters, or is just a bounce back that the traders are maybe playing with?
Stop has had a lot of false starts over the last 1 year. The stock went up to 850, 900 couple of times, did not sustain. We are back to 550 to 600 band. This is where it was in 2018 as well as in 2014-15. So the stock has had a 10-year zero return. So at current levels, looks like a good entry point. There have been a few blocks also over here. So it could be an eventual bounce back going forward. So for now, expecting it to hold above the 550 mark and head up towards 750 slowly and steadily. So looks interesting if one has a little longer term view. Phoenix Mills, on the other hand, is now getting into a consolidation after a slow and steady uptrend. So that would be an avoid.
Then that's the take coming in on both of these names. A decent move in today's trading session. But with this, let's also start taking the closing trade from our experts then. And Naresh, if you can help us with what are you looking at this point in time? Any stocks on your radar?
So that would be one from the oil and gas space, which is GAIL India. The stock has corrected from 245 down to 185, 190 levels. This is where it made a bottom on June 4th. So the stock has gone nowhere. This is where it was in February also. So looks like a good entry point for a bounce back. Would keep a stop loss at 189. Expect a bounce towards 200 in the next couple of sessions itself.
Okay, that's a buy coming in on GAIL, and clearly oil and gas seems to be the flavor of the day. Kunal, what about your closing trade ideas?
I'll go with the ban Bajaj Finance. In fact, one of the sector which has been starting to look very attractive is the financial services space. So I think there are a lot many stocks within the pack which is looking attractive, and they've come back into a more of a recovery mode. So I think Bajaj Finance could be amongst the stronger and the more formidable names. The stock is on the verge of a breakout, just around that 7,500 marks. So would look to bet on the stock on the closing basis.
UBL, that's the one stock which is seeing quite a bit of nosedive. It's now down about almost 4.25% as we speak right now. The company has decided to suspend its supply of its beer to Telangana Beverage Corporation Limited. What does it really mean? How big is the Telangana market for UBL? Let me take it across to Sharad and find out exactly that. Sharad?
Well, yes, in focus is United Breweries, and the company has decided to suspend its beer supply to Telangana Beverages Corporation Limited. Now, in exchange filing, they have stated two rationales for this. The first one being, of course, TGBCL has not revised the basic price of company's beer since 2019-20, and also the second rationale is that there is a significant overdues remaining unpaid by TGBCL for the past supply of the beer by the company. Now, what does this mean is Telangana state would be a major loser when it comes to the short-term excise revenue, and incidentally the latest figure of dues from the Telangana government or this corporation is not known since July 2024. The company has said that they owe roughly 900 crore odd rupees, and industry overall owes around 5,000 crore rupees. Now, as per analysts, two important things has come. Telangana state contributes roughly 15 to 20% of the total volume for United Breweries, and that's a big pie. Also, earnings contribution is coming is roughly 10 to 12% from the Telangana state as well. LRI in its recent flash note also stated that any positive action by the state government within coming 3 months shall reward the company with a price hike coming in the peak season going forward, and also a prolonged supply suspension for more than 3 months may significantly impact its competitive positioning in the state as well. So that's important news flow coming in from the analysts as well.
Right, Sharad, thank you so much for getting us all those details. After this particular news, we have seen knockoff around 6% on this particular counter. But Varun, help us with your take as well, because Telangana as a state contributes significantly in terms of the overall volume, as well as the earnings contribution is around 10 to 12%. And some of these reports are highlighting that any positive action by the state government within the next 3 months shall be rewarding UBL in a favorable manner. How do you see this news, and do you believe that going ahead there are some chances of reversal of this particular decision that has been taken now?
See, honestly, it is very difficult to comment as of now, but it doesn't make sense that this thing prolongs for too long. Logically, if so, it is a lose-lose for both of them. Eventually, I think there should be some positive coming around here, and things should get sorted. I don't see this issue continuing for long, in my view.
Shouldn't be a lingering issue. That's the word coming in from Varun. Varun, good to have you on the show. We'll let you go on that note.